Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Wednesday, February 11th, and this is your New York Open Prep. A stronger than expected U.S. jobs report is resetting interest rate expectations and the dollar tone, while trade policy jumps back into focus with tariff costs and a House vote on Canada measures. And commodities are split between resilient gold and a tug-of-war in oil. The labor picture is the headline. U.S. payrolls rose by 130,000 in January, with unemployment dipping to 4.3%, topping forecasts and easing some worry about momentum to start 2026. Equity futures extended gains on the release, but the read-through for policy is that rate cut bets were trimmed, especially for mid-year. You saw that in currencies, where the euro briefly slipped against the dollar before stabilizing, and in gold, which dipped then held firm above 5,000. Policy and trade are back on the front burner. New figures show states in key midterm battlegrounds paid over $134 billion in tariffs last year, sharpening the affordability debate. Meanwhile, the House is set to vote on the Canada tariff package after Republican leaders failed to block disapproval votes, keeping cross-border supply chain uncertainty in play. North of the border, the Bank of Canada's upcoming summary of deliberations is expected to offer more nuance than January's cautious message, a potential catalyst for the Canadian dollar. On commodities and geopolitics, OPEC held its outlook steady, still seeing demand for OPEC plus crude dropping by about 400,000 barrels a day from the first to the second quarter. Even so, U.S. crude is firmer this morning on Middle East supply concerns, with high stockpiles limiting the upside. In the Americas, Washington's arrangement for Venezuelan oil sales is raising questions about which government the U.S. recognizes. While in Russia, sanctions continue to bite, as Novatek reported a 60% slump in 2025 profit. In markets and sectors, the Australian dollar is leading gains, trading at its highest since early 2023, as investors price a high chance of another Reserve Bank of Australia hike and take comfort from housing data. Analysts note the RBA's early tightening and hawkish tone have underpinned a strong start to the year. Elsewhere in FX, the krona is supported by a steady Riksbank stance, while the pound remains heavy amid UK political uncertainty. On the corporate side, Shopify shares are lower despite a revenue beat, strong guidance, and a $2 billion buyback. And the AI theme stays selective, as strategists say the market now wants proof of returns, even as equipment suppliers post standout quarters. Scripps, for its part, is leaning into cost cuts and newsroom AI to lift earnings without replacing journalists. Turning to market and sector focus, the stronger U.S. jobs print is supportive for risk sentiment and modestly dollar positive on the margins, a mix that keeps gold well bid as a portfolio hedge and caps euro rebounds. Oil looks two-sided, with geopolitics providing a floor, but demand guidance and inventories tempering rallies. The Aussie remains the outlier strength story on policy divergence. Looking ahead, it's a relatively quiet calendar, but keep an eye on the Bank of Canada deliberations and any movement on the House tariff vote, along with ongoing earnings updates and OPEC commentary. For today's watch list, keep watching the Australian dollar against the US dollar, looking for an uptrend to persist on RBA hawkishness. The euro against the dollar bears watching for a drift lower on firmer US data, with shallow bounces. The US dollar against the Canadian dollar could whipsaw around the BOC release and any Canada tariff headlines. In commodities, look for oil to grind higher on supply risk and thus inventory chatter grows, and for gold to hold a steady bid above 5,000 as rate cut timing is pushed out. In short, resilience is back in the data, policy is the swing factor, and markets are optimistic, but still sensitive to surprises.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.